Hi everyone, welcome to my channel. I'm Doris. I'm here to show us about my stock account and today's market update. Today, Apple has closed down 0.66%. SQQQ closed up 1.63%. SPY closed down 0.13%. United Natural Gas closed up 3.46%. Today, the industries generally closed lower, and right now the net asset of my account is 67,919.95. Today I think I'm still waiting for a further decrease in the Apple's stock due to the in hoping that the upcoming PCE price index will show that the US economy is more resilient, and thus the interest rate decrease will be less likely. And by that time, I'm hoping that Apple's stock will decrease a little bit more, and hopefully when it reaches around 175-ish, that will be the time when I start to sell Apple. Dow Jones Industrial Average closed down 0.06%, Nasdaq closed down 0.55%, and S&P 500 closed down 0.17%. Today, the industries that closed down were the tech industry, including internet content and semiconductors. On the other hand, insurance and auto manufacturing closed up by more than 0.5%. Recently, today, Dow fell for the third straight session. The US GDP fell short of expectations in the fourth quarter. The New York Fed president said, "When you get interest rates depends on the data," and the Atlanta Fed president expects interest rates cut to be appropriate this summer. Earnings continuing to be out. The online shopping platform eBay has announced it'll raise its quarterly dividend and invest an additional $2 billion in repurchases. Urban Outfitters announces its weaker than expected fourth quarter results. Drew Petit, head of U.S. equity strategy at Citigroup, said, "I really don't think investors should continue to chase up at this time. A lot of good news is already reflected in the stock price. We really don't see much performance beating expectations and a broad improved performance outlook." He added, "Right now, enjoying the stock's rally, however, it is at the risk of a burst." And let's look at the Wednesday's economic data. The fourth quarter real GDP was revised up 3.2% from the same period last year, compared with 3.3% expected and 3.3% last month. Home demand last week approached its lowest level since 1995, hit by mortgage rates above 7%. With mortgage rates remaining above 7%, a measure of U.S. home purchase applications fell for the fifth straight week, near its lowest rate since 1995. The Mortgage Banking Association (MBA) buying index fell 4.5% to 127.6, its lowest level since October. When it fell to its lowest level in nearly 30 years, the 30-year fixed mortgage rate fell 2 basis points to 7.04%, hovering near its highest level since early December. Mortgage rates were below 7% at the start of the year, driving sales of new and existing homes in January. But given strong economic growth, good conditions in the labor market, and persistent inflationary pressures, Fed officials say they are in no hurry to cut interest rates, which has pushed up the cost of housing financing in the recent weeks. In 2022 and 2023, interest rates rose at the fastest pace in 4 decades as the Fed tried to contain soaring inflation. This week we'll be posting the Thursday's January PCE report, the Fed's favorite inflation indicator, and investors will rely to gauge the Fed's future rate cut path. The market now expects the PCE index to rise 0.3% in January from December and up slightly from 0.2% in December, according to a survey. Analyst at UBS said the PCE inflation data could provide some clues about potential pace and path of the Fed's rate cut in 2024. While the Fed could raise interest rates again if inflation accelerates again, our basic forecast is that, starting from June, the Fed will cut interest rates 3 times in 2022, for a total of 75 basis points. Compared to the earlier this year when the Wall Street banks expecting the rate cut to be at least 150 points, especially for Goldman Sachs and Bank of America, the Wall Street has become more and more conservative towards the Fed's interest rate cut outlook for this year, and we shall see how from tomorrow's PCE price index. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.